The Snap Inc. stock is currently trading at $8.03, marking a substantial gain of $0.72 or 9.85% in today's intraday trading session. The initial expectation for Snap, following what was essentially a mixed earnings report, was for a moderate reaction, perhaps a slight positive bump or just a hold steady after a disappointing aftermarket dip right after the numbers hit the tape. But the reality that has driven this near double-digit surge in the stock price isn't the marginal beat on revenue or the narrowing net loss. Those are good, but frankly, they're standard operating procedure for a company fighting for relevance in a crowded digital space against behemoths like Meta and TikTok. The real insight, the one that's powering the jump and demands a reevaluation of the entire Snap story, is the $400 million partnership deal with Perplexity AI. This isn't just about integrating an AI search feature. It's a massive, capital-generating strategic pivot. It immediately provides a significant and non-advertising revenue stream expected to start contributing in 2026, offering a financial safety net that fundamentally alters the company's valuation thesis. It signifies that Snap, through its immense user base, now boasting 477 million daily active users, an 8% increase year over year, is finally converting that scale into a valuable, monetizable asset beyond the direct response advertising model that has been so volatile. The market is now looking past the quarter's direct advertising performance, which was geographically uneven, to the stability and diversification that this kind of external partnership guarantees, and that is why we are seeing such aggressive buying volume today. The common understanding of Snap stock has been one of constant struggle, a platform with incredible reach among the coveted Gen Z demographic, but one that perpetually grapples with execution, profitability, and competition. Investors generally agree that the product is sticky, witness the 477 million daily active users, but they worry that the core business, which is primarily advertising, is too weak, particularly in the most lucrative North American market, where ad revenue grew by just 1% year over year in the last quarter. This anxiety is reflected in the stock trading near its 52-week lows just before this announcement. The prevailing belief was that Snap would remain a deeply speculative growth play, dependent on a fragile digital ad market and always susceptible to a competitive push from rivals. However, the Perplexity AI deal challenges this low expectation directly. This is not a speculative add-on, it's a $400 million commitment paid in a mix of cash and equity, providing Snap with a non-dilutive capital infusion and a concrete path to greater revenue diversification, as well as a strong validation of their user base's value. The deeper take is that this deal essentially turns Snap's user base into a secondary monetization engine for a cutting-edge AI product, a model that could be replicated with other partners and truly sets them apart from the pure-play advertising model of its competitors. It's a move that reframes the conversation from "Can Snap survive the ad wars?" to "How much is Snap's distribution and young user network worth to the broader technology landscape?" Let's unpack the recent stock movement and the underlying financial currents. Today's 9.85% jump is not an isolated event. It's the market's delayed but fervent reaction to the full implications of the third quarter report and the Perplexity AI deal, which were released after the bell yesterday. The initial dip in after-hours trading was likely a knee-jerk focus on the deceleration in North American advertising growth and the slightly disappointing outlook for fourth-quarter user growth, where the company actually expects a decline due to new age verification measures and regulatory changes, particularly in markets like Australia. But the institutions and sophisticated individual brokerage accounts digested the entirety of the news, the weight shifted. The reported revenue of $1.51 billion, a 10% increase year over year, did beat consensus estimates of $1.49 billion. More importantly, the company's efforts at controlling costs showed real fruit. Net loss was significantly reduced to $104 million from $153 million in the prior year, and adjusted EBITDA came in at a solid $182 million, a 38% improvement year over year. The free cash flow generation of $93 million in the quarter also signals a healthier operational footing, one that gives management more breathing room for strategic investments and managing their balance sheet, which currently holds around $3.0 billion in cash and marketable securities. The stock is essentially trading on a narrative shift from a deeply loss-making entity to one demonstrating real, sustained progress towards profitability underpinned by a major, unexpected capital infusion from an AI partnership. Looking into the business segments, the advertising revenue growth of 5% year-over-year to $1.32 billion is modest, but the growth drivers are changing. The large client solutions, the big brand name advertisers, continue to struggle, but Snap is making significant headway with small and medium-sized businesses, which saw over 25% growth. This is a crucial, if less splashy, win, as SMBs are often the core engine for platform-wide direct response ad health. Similar to how this segment has fueled Fidelity's successful venture into broader financial services, or how it is a core target for platforms like Interactive Brokers that seek diverse trading volume. On the other hand, the other revenue segment, largely driven by the Snapchat Plus subscription, exploded, up 54% year-over-year to $190 million, reaching an annualized run rate of over $750 million. With nearly 17 million subscribers, this subscription segment is becoming a truly durable, high-margin revenue line. This is a model that a platform like Robinhood is now trying to emulate with their Gold subscription, acknowledging the value of a premium, non-advertising dependent user tier. The company's focus on monetization efficiency, including AR-driven ad formats and new AI tools for advertisers, is showing results in direct response advertising, which grew by 8% year-over-year. The market's excitement is therefore a synthesis of three facts: a surprise $400 million deal, accelerating growth in the high-margin subscription business, and tangible progress on the path to profitability, even if the user growth forecast for the immediate future is cautious due to internal policy changes and external regulation. Snap's core business remains an exercise in visual communication and augmented reality. The company provides the Snapchat application, a social and visual messaging platform focused on camera-based communication and ephemeral content. Its main product features include the camera, which offers various AR lenses and filters, the communication section for one-on-one and group messaging, the Snap Map for location sharing and discovery, Stories for content sharing with friends in the community, and Spotlight, its vertical video feed designed to compete with TikTok, similar to how platforms like Fidelity ETFs compete for investment products. The business model is centered on selling advertising on the platform, primarily through full-screen video ads and sponsored creative tools like lenses and filters. The company's massive investments in augmented reality are a long-term play that continues to distinguish them. The community uses augmented reality lenses 8 billion times a day, and over 500 million users have engaged with their generative AI lenses. Their efforts to diversify revenue also include the sale of their Spectacles hardware and the continued rollout of Snapchat Plus, which has proven that a significant portion of their young user base is willing to pay for premium features. This subscription success is a bright spot and a sign of brand strength that often gets overlooked by investors who are solely fixated on the competition between Apple stock and other hardware giants, or the volatility of a company like Tesla stock. Now, let's talk about the future outlook, where the expectation versus reality tension is most pronounced. The expectation, based on the year-to-date stock performance, was that Snap would continue to be constrained by a tough macro environment and intense competition, making a return to its high-flying valuation unlikely. The reality, however, is being shaped by two key catalysts. First, the Perplexity AI deal offers a clear and substantial medium-term revenue stream that is decoupled from ad spending volatility. This allows management to focus on operational improvements and longer-term bets without the same quarter-to-quarter panic that characterized previous years. Second, the sustained success of the Snapchat Plus subscription business suggests an accelerating shift in average revenue per user that is more predictable and resilient than advertising alone. If Snap can convert just a fraction more of its near billion monthly active users to paying subscribers, the ARPU story changes dramatically, especially given the platform's strong standing with the highly valuable younger demographic. The risks, of course, are real and shouldn't be dismissed, as any professional trader or someone using a Schwab Intelligent portfolio understands. The company itself warned of a potential decline in daily active users in Q4 due to new age verification measures, which could limit overall reach, though it strengthens the platform's compliance and long-term health. The North American advertising business must stabilize, and the company is still reporting a net loss, meaning the path to sustained GAAP profitability is still a work in progress. Furthermore, the Perplexity AI deal is great, but Snap must continue to innovate in its core ad product to compete with the sheer scale and technical prowess of rivals. We are in a